Hi, welcome to Market Alert for Friday, the 4th of October 2019. So, according to Bitcoin News, that we're showing signs of forming a long-term bottom despite current consolidation. So let's have a look at the Bitcoin market. Let's start off with the daily chart, and we're certainly in a sideways range there. It's easily defined, and also, something else that's easily spotted is the fact that the market is finding resistance at the 200 moving average there, unlike the Dow, which we'll look at in just a moment. So you can see prices are coming back to what appears to be a test of the 76% retracement there, currently holding above the $8,000 for this market. So let's have a look at yesterday's activity. And if you recall, in the alert yesterday morning, we were looking at this and I said watch for the prices holding at the 200 MA. So let's go back and have a look at this. So yesterday morning, when I was recording, I spoke about the market finding support at the 200 MA, and you'll see that support coming in there with this volume. And as I said, it would have to break and move sharply to the downside, and if not, then it started to hold and trade sideways. Move the stop to break even and let it take you out. You can always get back in, but thereby reducing the risk. And the only reason you're doing this is because of what you're seeing here, where prices are finding that support, and also at the daily pivot, which is a crucial area, and in combination with the 200 MA, a very important area. But as prices traded, you can see they hold, they move back, and I'll just wind forward because there's a lot of bars on here, and then eventually you see the selling coming in with the red bar there and the increase in volume, and the market trading down to the scalp level. Then it's a matter of what it's going to do when it gets to this level, and you'll see prices then moving lower. But what's important is this here. Watch the volume, because the market's the range of this price bar is less, that's its high and its low, than the selling bar, and you're likely to see some sort of support coming into the market. You see prices coming off the low. We'll just skip through this. I went and had a look in the smaller time frames there just to see what was going on. And here you'll see that the volume is now increasing significantly, and you'll see as the bar completes over the 15 minutes, we've now got a test. So we know we've got some buying coming into the market. And the key here with testing in the market doesn't always mean that the market will move higher. It can be short traders getting out, taking profits, and if you're short, you have to sell the contract, and to get out of it, you have to buy it. So it isn't always going to be a case that the market's tested and then free to move higher. So having moved the stop to break even, prices are trading sideways to lower. And then what I'm going to do now is to take the range of the test bar, the high and the low, and I wanted to see if the market would trade below 3/4 of this, just to see how much strength and momentum the market had actually got. So you'll see prices coming down to this level, and it sits at it, bounces back off it. And then I was looking at another market as well, so we'll just fast forward through that. And you'll see I've got the low marked up as well, just in case the market takes out the 76%. But the key here is to keep an eye on the very simple things that are going on when you're actually moving a stop on a trade, and that's look for the lower highs. Because if the market's making these lower highs, apart from this bar here where it came back, then there's nothing to panic about. There's nothing to be concerned about, because the market, as long as it's making these lower highs, then nobody's bidding higher than that, then the market's going to maintain that direction. And this is where I trail the stop. You can see there now the market trading also to 76% from here to here, and that's what I've drawn in here. You can see it's a bit blurred there because it's overlaying, but I'll just move that to one side. There you go, so you can see it. So a very important level here, very important level now. So if you wanted to take the profit at this level, then there's nothing wrong with doing that. You can do it, and then you'll see prices finding support again, and now starting to come back. And if you've moved the stop down on the trailing highs, then you'll see the trade taken out. So again, just by using the tools that are available and learning to read the markets on a bar by bar basis, you can actually see what prices are doing and thereby maximize the potential of the trade as well. At this point, I had to go out, so we'll go back to what happened after this and have a look and see what the market did. So here prices, they bounced a bit, and they bounced up to where? The 200 moving average, the black line, and then we had another signal, the 20 bars below this as well, or so I should say below the 200 MA, and then prices move lower again. And we see this same thing that we've seen here. We've got the buying coming into the market, the short covering, the market moves higher, trades back to the 20 bar moving average. It then rounds over, and then we see huge selling as the market trades lower and then stops, and then we get a bounce back to the 20 bar moving average, prices close back below, and then we get a resumption of the lower highs. And then eventually the market's had enough on the short side, and the question is why? Well, if we go from the low here, the recent low, just make sure I've activated it, from the low to this high, you'll see the market stop at the 76% area here, and then this leaves the market free to wind its way back up to the magnet that is the 200 bar moving average. This time it fails to hold because the market is fairly bearish, and then we close back below it, and then we come back down and retest the lows to the left there, and again you get that short covering coming into the market. And at the moment we can see that we've got a bit of buying coming in here as well. So yeah, that's the Bitcoin market and reading what's going on a bar by bar basis, and the videos are available on the site in the tutorials. And once you get to grips with this, you can actually read more or less with a very high degree of certainty what the market's going to do. The key here though, as with all trading, is that even though there are patterns that are repeatable, always keep in mind that every single trade is unique. We don't know the outcome of what the trade is going to be, but we can use the repeatable patterns in order to manage that unique situation. Okay, let's have a look at the stock markets, and the hunt for Red October is over. And what is meant by this is that October traditionally is the time of year where the markets normally crash. 87, 89, 2008 was a bit earlier, that was August, but it didn't help through October either. And what's interesting here as well, as I've said in the market alert, none of this stuff is rocket science, especially where the manipulation of the Fed is concerned and central banks. And one thing that I've said for a very long time, which you can go back and check, is that they would shake the market to the downside to force the Fed's hand in order to reduce reduce interest rates. And you can see that this is what's being played out yesterday. So the market yesterday, if we have a look at the daily charts, again, we start with the big picture. The market trades down to the 76% retracement. It is also below the 200 bar moving average. And we've seen before that when the Dow, unlike Bitcoin, is forced below the 200 bar moving average, it is pulled back to very sharpish indeed. And this is what we're seeing yesterday. So now we could be seeing some sort of short covering again. The one day back above the 200 bar moving average doesn't really say it all. Yes, you could have a V-shaped correction where the market goes back to the highs, but I very much doubt it because the Wall Street boys are trying to force the hand of the Fed to reduce interest rates. And currently the forecast is, and the prediction is, that it's a 90% chance that the next FOMC meeting, which I think it's either next week or the week after, will see rates reduced by another quarter. So you've got the stock markets on the all-time highs, you've got the repo on the overnight markets, which has dwindled off a bit, but still in the region of 50 billion a night. And you've got unemployment at historic lows, stock market historic highs, and the reducing interest rates. This is unprecedented. Something's going on in the background. They're just holding this market on these highs. And as I've said before, you can see the volatility has increased in this market over the last few months as well. You've got these more shakeouts and then trying to bring the market back. The old printing of money, the methadone, just to keep the illusion alive there. So in the intraday, again, news yesterday sent the market sailing to the south side. And it's interesting now. It's all starting to make sense because, as I've said before, the market was ignoring the normal economic news items. But this week, they've started to pay attention. But are they paying attention or using it as a tool to force prices to the downside so they can force the Fed to reduce interest rates? So we get the classic shakeout, we get the market testing, and then we get the market moving prices all the way back, and the market finishing on a high of 122 points higher, as you can see there. We get to the 200 bar moving average, we come back through, we trade sideways for a bit because of the aggressive move back here, which you can see is 100, 200, nearly 300 points back. The market takes a breather. We then get back through the 200 bar moving average, and then we're good to continue all the way through to the close there. So that's the Dow, and the Dow today will be waiting for the non-farm payrolls. Oh, Powell's speaking today as well. So this is the big one at lunchtime. And they're forecasting having found another 145,000 jobs for last month. But it will be interesting to see what Powell says at 7 p.m. So he won't reduce rates. That could be famous last words, couldn't it? But I very much doubt it. He won't do that outside of the FOMC meeting. So, yeah, 1:30 and 7 p.m. for Powell today. And then finally, in the pound, apparently Boris has got a deal. This sent the pound moving to the upside yesterday, but prices failed to hold on the highs. And as the market was waiting for Boris, again, it looks a bit of a mess here, but let me just show you something, what was actually going on. As I did say yesterday, the pound wasn't going to do anything until Boris released his deal. And from this low to this high, you will see the market comes back and tests at this level. It's also the DP, and then prices right down at the 200 bar moving average, and then they come back and then start to move higher as soon as word gets out that Boris has some sort of a deal. I have no idea what it is. It doesn't really matter. I just trade what I see. I'm not interested in the details of a Brexit deal. And then the market trades up 100 pips and then pulls back at least 50% of these, as you can see here. That's about 50% retracement. And the market at the moment obviously still buoyed by whatever he's got, because prices are above the 200 bar and just sitting on the DP level, with the market about to kick off. And then finally, what's interesting in the implied is that because of the rally back strongly yesterday, 17.28, 17.69 the day before, is to be expected. Nothing of any great shakes there. And the same there, you can see the visual of it. So a bit of a pullback in the implied volatility. And yeah, the prophet of doom that I am, and I've been told that I am, yes, we're still inverted yield curve, and global growth has been slowing. No doubt the Brexiteers are going to get the blame for anything that slows down in the UK, when really this all started about 6 to 7 months ago, where we saw a sudden slowdown in global activity. It's got absolutely nothing to do with Brexit. It's to do with the increasing global debt in the central banks. And as I've said before, from the 1st of November, Europe start to print 20 billion a month to keep the EU project alive and kicking, or keep it on its life support, to put it another way. Okay, that will do for this one. Remember, 1:30, 7 p.m. See what Powell's got to say, and have a look at those unemployment figures as well. That'll do for this one. As ever, thanks for watching. See you in the next one.